Hello investors, welcome to Investors Central. In this video, we are going to know complete details of the fund Parag Parikh Flexi Cap. Let's check it out. Current NAV of the fund is 70.53 rupees and the inception date of this fund is 24th May 2013. Here, NAV of this fund during inception is 10 rupees and the current NAV, that means current price of this fund is 70 rupees. So, this fund has completed 10 years, 7 months till now. From 2013, that is in its journey of 10 years, the fund's NAV has grown from 10 to 70 rupees, which means 7 times. That is, if you have invested 15 lakh rupees in this fund during inception, you would have become a crorepati by now. This fund is managed by Mr. Rajiv Thakkar, who is a chartered financial analyst and has more than 15 years of experience in the field of investments. Coming to the exit load structure of this fund, this is a topic to discuss. Here, this fund has a different exit load structure. It charges 2% exit load for up to 365 days, which means if we withdraw money within 1 year, we have to pay 2% charges to the asset management company. And if we withdraw the investments from this fund in the second year, that is from 365 days to 730 days, then we have to pay 1% exit load to the AMC, which is good and bad, both. I'll tell you why. It is good in terms of making investor stick to his investment in this fund, and bad in case the investor want to withdraw his money from the fund during some emergency. Coming to the structure of the fund, this fund has 85% allocation to stocks, and currently this fund is holding 14% in cash or liquid assets. Maybe the fund manager is trying to catch a dip after booking some profits. And this is purely my personal opinion. I am not sure why the fund manager is holding 14% in cash or liquid assets. Coming to portfolio split, the fund has given large exposure of 85% to giant and large cap companies. Mid caps constitute about 14% and a smaller chunk of less than 1% was allocated to small caps. So the fund manager here is fetching major returns for this fund from larger giant companies, which is good and that helps in reduced volatility in the fund also. Coming to the geographical diversification of the fund, this fund has foreign equity of 17.75%, which is included in the 85% giant and large cap previously we have discussed. So in that foreign equity exposure is 17.75%. In that exposure, there is allocation given to Microsoft, Meta, Amazon and Alphabet. And coming to further detailed analysis on the stocks in the portfolio, this portfolio has 48 total number of stocks, and out of that, top 10 stocks contribute about 52.72%, and top 5 stocks, that is HDFC Bank, Bajaj Holdings, ITC, HCL and Power Grid, contribute about 30% in this portfolio. Coming to risk and return metrics of the fund, this portfolio has beaten its benchmark, that is the index S&P BSE 500, in almost every time frame. The time frames we are seeing here are 6 months, 1 year, 3 years, 5 years, 7 years and 10 years. In every time frame, the fund is able to successfully beat its benchmark. So this is a good thing. Coming to another advantage of this fund is successfully able to have lesser standard deviation than its benchmark, that is S&P BSE 500 stocks. So its Sharpe ratio is also extremely higher than its benchmark and the category, and it is one of the best performing funds in its segment. And beta of this fund, if we see, it is just 0.65. Normal beta for any index will be 1. It is 0.35% lower beta, that is volatility, 0.35% lesser than its benchmark. And alpha is extremely good at 7.7%. So the risk metrics completely positive for this fund. So it is extremely good. Coming to the key highlights of the fund. This fund has efficient management, lower volatility than its index, and decent returns with large cap exposure, and geographical diversification with foreign stocks. And this fund has high assets and under its management of about 52,007 crores. I am seeing only negative in this fund, that is with exit load. This fund has 2-year exit load and 2% for the first year and 1% for the second year. This can be a problem for an investor who needs his funds immediately. he needs to pay 1% even he withdraw in the second year also. Except that this fund has passed all the metrics and beating its benchmark consistently since very long period of 10 years. Hope you have enjoyed the review. Thank you so much for watching till the end. Please do like, share and subscribe to Investors Central. Bye.